To keep you updated on the capital and financial markets, here is a recap of what happened.
Inflows into India's equity mutual funds moderated in April, while net assets under management surpassed 57 trillion rupees for the first time ever during the month. After taking nearly 5 decades to build the first 10 trillion rupees of AUM, the mutual fund industry needed only a year for assets to rise from 40 trillion rupees to 50 trillion rupees. The sector's growth momentum continued, with the last 7 trillion rupees of assets being added in just 4 months. Hong Kong's exchange fund investment income plunged 50% in the first quarter on local stock market losses and a decline in bond prices due to high interest rates, according to a Reuters report, citing Eddie Yu, chief executive of the Hong Kong Monetary Authority, who warned of a lot of uncertainties ahead. According to Yu, the HKMA has seen market sentiment turn more positive with more fund inflows into stock markets in Hong Kong and China. Looking ahead, there will continue to be a lot of uncertainties in the investment markets, he says. Facing these uncertainties, we will continue to be defensive in positioning the exchange fund to make sure there is sufficient liquidity to cope with the rapidly changing investment environment. Asset managers in Europe face new restrictions on what they can call an ESG fund. An investment product with ESG, or equivalent terms, in its name will need to place at least 80% of its assets under management in something that's related to environmental, social, or governance objectives, according to long-awaited guidelines by the European Securities and Markets Authority. Fund names are often the first piece of fund information investors see and can have a significant impact on investment decisions, ESMA said in a statement. The new guidelines are intended to specify the circumstances where the fund names using ESG or sustainability-related terms are unfair, unclear, or misleading, the watchdog said. Markets regulator Securities and Exchange Board of India said that it has decided to relax Know Your Customer norms to simplify the risk management framework. The markets regulator issued an updated notification on the Master Circular dated the 12th of October. In the revised circular, SEBI said that KRAs shall verify the client's permanent account number, PAN, name, and address within 2 days of receiving KYC records. It further added that the client's records verified by KRAs with official databases shall be considered validated records. SEBI also informed that the exchanges, depositories, and intermediaries concerned should complete the necessary technical change in their systems by the 31st of May 2024. The public has been reminded to remain vigilant against scams involving individuals impersonating National Scam Response Center officers, which may result in monetary losses. In a joint statement, the Association of Banks in Malaysia, the Association of Islamic Banking and Financial Institutions Malaysia warned of an increasing number of such scams targeting bank customers. The scam modus operandi begins with the victim receiving a call from someone pretending to be an NSRC officer. The caller claims that the victim's identity, such as the victim's national registration identity card number or mobile number, is linked to illegal activities like money laundering and mule account transactions. Read the latest issue of the e-Zine available at FIMM's official website to stay updated about what's going on in the industry.
This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.